Hi everybody, Steve Quivers here, developer of the MTPredictor software program. Today I'd like to look at how the market, the US E-minis unfolded yesterday, which was Wednesday, May the 11th, using MTPredictor 6.5. So first I'd like to go through and look at the automatic setups, then a bit of advanced analysis later on. Do excuse me, I've got a little bit of a cough today. First, on the 3-minute ES, you can see there weren't any automatic setups here, but we'll come back to this for an advanced setup a bit later. Let's go on to the NQ, and the NQ there was a sell setup right towards the end of the day that was stopped out for a -1R. But of course there's always the question there on whether you want to be taking a setup close to the end of the day, because there's very little time for it to actually unfold, so that could be a very dubious one whether you take. But there's also a buy setup here at, let me just put the cursor on here, if I zoom in a bit, this one was at 10:39 inside bar 10:42, so it wasn't actually filled until 10:45. Now the reason I'm noting that down is you'll see in a minute when I go to the YM. In fact, let's do that now. Let's go to the YM, and here we can see, if I zoom in a bit, we zoom in a bit. Here's a setup at 10:12. This was a valid setup because the blue bar was on a black STF, so this was a valid buy setup and actually was stopped out for a -1R loss. So here's the first official trade of the day, which is -1R. However, what I want to look at is the setup here. If I turn the data on, you can see that we actually had a double bottom. That low was 12,636. That low was 12,636. So this is why we had a history triangle here, not because this trade was stopped out, but because it was a double bottom. So this is what happens sometimes with history triangles. It doesn't mean they're losing trades. I phrase that as fill trades. This one here was on a red STF, so you could be a little bit worried by that and say, well, actually I don't really like the idea of that because it's a red STF. But the second one was on a black STF. So let's put the analysis on this. Right mouse click, automatic analysis. Click on this bar here, and here you can see that this bar was actually 10:39. Can you see at the bottom here? It was 10:39 and the trade was filled at 10:42. Now do you remember I said that on the NQ the trade was at 10:45? So the NQ trade was after the YM trade. So in reality you'd have been filled on the YM trade before the NQ. Now this is one thing that is very important. It's about doubling up. So you can imagine if you are long the YM and long the NQ, both with 2% risk, it means that suddenly you've got two positions, so you double up for a 4% risk, and of course that's not what we want to do. So this is why you need to look at the four E-minis basically together. And what we do is we say we look at only being in one of the trades at any one time. So for this, you are long the YM, so therefore you should not have been long the NQ. So the potential losing trade of the NQ should not have been taken because you're in this YM trade. Now hopefully you all understand what I'm talking about there. Makes common sense, is you don't want to double up on your risk. This turned out to be a lovely little trade. And this is a good one because we were actually watching this in our training webinar yesterday. So we actually pointed this out in our training webinar yesterday and watched it as it got up to our first target here. You can see at this level here we come down and we see that the STF was weak. Therefore standard trade management guidelines said to come out at the target, so this banked a nice plus 2.6R. So I'll just note that down. So the only trade so far would have been a -1R loss from here and then a plus 2.6R trade from here. Right, Let's just zoom out again and see what happens the rest of the day. Nothing happens the rest of the day. Let's go and look at the NQ, sorry, not the NQ, the Russell. Here we actually had a nice TS2 sell here. No questions at all. TS2 sell against a red STF. Let's put the analysis on. Bang, there. You see the market beautifully went right down to our first projected target. STF was nice and weak, so we come out at the target for a lovely plus 3.1R. So that was a really, really nice trade there. We have a TS4 sell a bit later in the day. This went down ever so slightly, and in fact, actually, if we put the analysis on close, you can see that was plus 0.7R. Now, of course, as I said earlier on the NQ, there's always a question on about how close to the end of the day you take trades. The NQ one was effectively around about here, so we only had a few bars to go, so it was really close to the end. This one was actually at 3:30, so you could actually have a 3/4 an hour, so probably was okay to take. So that put in another 0.7R. So overall, using the standard trade management guidelines yesterday, we had minus 1R, plus 2.6, plus 3, plus 0.7, which I make just over 5R. So just on the automatic setups using the standard trade management guidelines, yesterday was a very good day, and if I've got my maths correct, and you guys can go through and double check that, it should have been about a plus 5R day. Now think about that. 5R at 2% risk per risk unit means a 10% return on your account in one single day. Now I don't know about what you guys think, but I think that's an extremely good result. But that's just for the standard traders. I also want to look at some of the things I was looking at in the training webinar yesterday for advanced traders to enhance their trading a bit further. I was actually looking at a short off the high of the day here. If I put the DP on from the prior swing, which was here, you can see that the DP nailed this high, which was actually the very high of the day. So here you were looking to nail the very high of the day. I had my initial target, the DP from this low here. If I look at the volume, this one here was actually a high volume VSA spike. There it is there. There's your high volume VSA spike with your reversal afterwards. And I set up a potential short trade into this level here, which would have turned out to be plus 2.7R. Now if I'd stuck to this and kept on down, you can see that when the market reached this level, the STF was strong. So trailing it all the way down to here with the STF, with the ATR stop, would have produced a very nice plus 6.4R profit. However, there was one slight problem with that, and it was our buy setup that came in here. So what I suggested at the time was, if you were a bit nervous about this, what you could have done is actually said, well, I'm going to protect my profit by bringing my stop down to the trade setup buy level, which was about plus 1.1R. So even at the worst case scenario on this trade here, even if you hadn't have run it all the way down, it should have added another plus 1R to your profit yesterday. And again, I was talking about that in the training webinar yesterday. Now, as we've seen, the market did actually make quite a sharp decline down here, and so even without catching that decline, the standard traders would have still been up plus 5R, which is a very good result. But I know some amateur traders don't seem to worry that they're making profit. They always get frustrated for missing moves, which of course is completely incorrect. Professional traders worry just about profits. But just for the amateur traders among you, was there any way that we could have caught this decline? Well, if we go back to the ES, let's have a look at this. As we've already seen, there were no automatic setups. However, if we look at this little wiggle here, this looks awfully like an ABC to me. If I put the Elliott waves on, guess what? It's an ABC pattern. And guess when it was unfolding? At 11:24. And if I go back to our YM trade, this was when our profit on our YM trade was happening at 11.24. So we were anticipating a high on the YM at exactly the same time as a ABC correction was coming in on the ES. So advanced traders among you could have looked to say, well, actually the trend is flat to down. You were thinking that the high was coming in. You could have then taken a short trade below the red sell bar, managed it with the ATR stop down to here for another plus 4.8R trade, and that would have actually caught that decline down there. But that was a bit more of an advanced trade because you were using the Elliott wave module to catch the ABC correction. So the tools in the software are there for the more experienced and advanced traders among you to catch trades like this, but overall it was a very good day yesterday for MTPredictor users, particularly for the standard traders that, as we've seen, should have been approximately plus 5R profit overall on the day on the 4 USE minis. Then for the advanced traders there was a potential short trade there, and also on the NQ, which I particularly liked, if I scroll out for the whole day, was the high volume VSA spike that actually nailed the very high of the day. I always love it when you can get into a short trade off the reversal at the very high of the day. And again, MTPredictor has the tools in the software that will allow you to uncover trades like this. But overall, a very good day for the MTPredictor software program yesterday for both standard and advanced traders.